All right, Target stock has been underperforming and is now trading near its 52-week low. Investors are asking me what's going on with Target stock? Why is the stock price crashing? And do I think it's a buying opportunity? I'll answer all those questions in this video. I'll share with you my proprietary discounted cash flow valuation for Target, which calculates the fair value for the stock. I'll also share with you the valuation on a forward price to earnings basis, and I'll also go over the company's latest quarterly earnings call transcript, where the company discussed the results with Wall Street analysts. I'll do all that in this relatively short video, so let's jump right into it after a brief message from my sponsor.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So, first things first, Target's results have been so poor that it necessitated a leadership change at the top. So, the board of directors has unanimously elected Michael Fidelki to become Target's next CEO and to join the board at the start of their 2026 fiscal year. So, the management team also wanted to make it a point to highlight some of the positives about Target's business as investors have grown impatient with the company. So Target saying they have nearly 2,000 well-located, well-maintained stores located in all 50 states. They have a $31 billion brand portfolio supported by best-in-class product design, development, and sourcing capabilities. They have an assortment that includes best-loved national brands in every category and world-class partnerships, including with Apple, Starbucks, Levi's, and Champion. They have a growing and profitable first-party digital business, which provides the fuel for their high-margin businesses like Rondell and Target Plus. One of the biggest loyalty programs in the country is Target Circle, which offers a growing list of services, including discounts, same-day delivery, and 5% off when using the Target credit or debit card. So let me share with you my thoughts on what the management team just talked about here. So regarding the 2,000 well-located and well-maintained stores, I agree with that. Target stores are better maintained and have a better presentation than other brick-and-mortar retailers. Overall, the shopping experience, and I think you might agree, is more attractive at Target compared to, let's say, Costco or Walmart. Target has wider aisles, less crowded, and you can find the things you're looking for, and there's people walking around to help. Whereas compared to, let's say, Costco, their aisles are narrow, very crowded locations, hard to find what you're looking for, and aren't very many people available to offer you help. But most notably, it's the crowded locations that makes it a big distinction compared with Target. Costco has the strategy of trying to get the most out of each location, so they won't build another location until it's absolutely necessary. Whereas Target considers the shopping experience, and if one location starts becoming too crowded and has a lot more visitors, they'll open another location even if it's relatively close by. That distinguishes Target from other brick and mortar retailers. The $31 billion brand portfolio that had distinguished Target in the past. However, recently those products have become less popular. And of course, the sourcing of these products coming mostly outside of the United States presents a challenge for Target and its investors. The partnerships are very good for Target, especially the one with Starbucks. Many shoppers enjoy being able to buy a Starbucks drink before you do your shopping, and you can enjoy your beverage while you're doing the shopping and maybe pick up a beverage on your way home for the rest of your family. The other partnerships, including that with Apple, is also a huge positive. Apple, through its marketing efforts, creates demand for its own products, and folks feel comfortable and confident that when they go to a Target store, they can find almost every Apple product they need. So I'll add something to the list for Target here, which they didn't mention in this highlight of the company's benefits they offer customers, and that is the growing popularity of its same day services. They talk a little bit about same day delivery, But what's been more popular with customers is buying online and going to a Target parking lot and having the Target employee bring the order to your vehicle. This has been incredibly popular, not just with Target, but also with Walmart. Customers really like this option, and this option is what gives Target and Walmart an advantage against Amazon in terms of order fulfillment. Because as fast as Amazon is getting, Target and Walmart can be faster with the buy online and pick up in store because of these locations, right? They highlighted 2,000 locations in close proximity to many millions of people in the United States, and Walmart the same, right? So that's something that's been incredibly attractive and something that I've given management a lot of credit for because that's something that consumers have appreciated. By the way, this document I'm reading from is Target's second quarter fiscal year 2026 earnings call transcript. I've made this document available for my channel members. You can see this in the membership benefits section of my YouTube channel page, and you can join my channel for less than $5 a month. See the link in the description for all the benefits you get. These highlighted conference call transcripts are just one of them, and there are dozens and dozens of these already available, and I'm adding to them regularly. So now let's look at valuation. Target is trading near its 52-week low, which is $87.35. And right now, the market price is $92.67 as I'm recording this video. The intrinsic value per share, which I updated this morning, I lowered the intrinsic value. Well, I didn't lower the intrinsic value, but I made some adjustments to the inputs to this discounted cash flow valuation model, and the adjustments caused the intrinsic value per share to decline. I now calculate the intrinsic value per share at $118, and even applying a margin of safety, the stock looks undervalued at the current market price using my proprietary DCF model. Now, I also like to look at valuation on a forward price to earnings basis, and my preferred data provider for those forward PE charts is fiscal.ai. There's a link in the description for their services also. Target is now trading at a forward price to earnings of just 11.88, which is near the lowest you've been able to buy this stock going all the way back to 2016. Save for a brief moment during the pandemic when there was that big scare from investors and the valuation dropped to a forward PE of around 10. Besides that moment, you haven't been able to buy Target stock at this low of a valuation. Of course, Target's business is struggling. Year-over-year comparable store sales are declining, and the management team needs to get a handle on what's going on before they can turn things around. So the risks are above average right now for target stock investors who are used to a company that is not a high risk business. I've had target stock rated as a borderline buy, which for me is in the middle of a hold and a buy, but closer to a buy. But today, I'm upgrading target stock to a buy given the already declining valuation and given the company is trading near the lowest on a forward price to earnings basis, going all the way back a decade. So I like the prospects longer term for this company. Near term, there are headwinds to be sure, but longer term, I like its position within the United States and the category it operates inside. I think overall, this is not going to double your money in a year or even two, or maybe not even three. But I think in your portfolio for 10 years, 15 years, 20 years, it'll increase your wealth, including dividends in that time. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.